Question 1, scenario-based. Topic: Claims management. Emily's company, a Texas-based healthcare provider, experiences a ransomware attack. The attackers demand $500,000 in cryptocurrency to release the encrypted data. Emily's cyber insurance policy includes coverage for cyber extortion and data breach response. The company engages a cybersecurity firm to handle the attack and notifies its insurer. The cybersecurity firm successfully negotiates the ransom down to $300,000, which is paid. The firm also incurs $50,000 in costs to restore systems, while Emily's legal team spends $30,000 addressing patient data breach notifications, which costs are likely covered under Emily's cyber insurance policy. A. The full $500,000 demanded by the attackers and the legal fees. B. Only the $300,000 ransom payment as negotiated by the cybersecurity firm. C. The $300,000 ransom payment, the $50,000 restoration costs, and the $30,000 legal fees. D. None of the costs, as paying ransoms is considered illegal under Texas cyber insurance regulations. Answer: C. The $300,000 ransom payment, the $50,000 restoration costs, and the $30,000 legal fees. Explanation: Cyber extortion coverage typically includes ransom payments negotiated by specialists, so the $300,000 paid is covered. Data breach response coverage often includes restoration costs $50,000 and legal expenses $30,000 for compliance with notification laws. The initial $500,000 demanded by the attackers is irrelevant since only the negotiated amount is paid, while paying ransoms to sanctioned entities is illegal. This situation assumes compliance with legal guidelines or FAC rules. Question 2. Topic: Policy structures and coverage. Which of the following is NOT typically covered under third-party liability coverage in a cyber insurance policy? A. Regulatory fines imposed by authorities for non-compliance with data protection laws. B. Financial losses suffered by a business partner due to a supply chain cyber attack. C. Costs of defending against defamation lawsuits due to content posted online. D. Direct costs of restoring an insured's IT systems following a ransomware attack. Answer: D. Direct costs of restoring an insured's IT systems following a ransomware attack. Explanation: Third-party liability covers damages or legal claims brought by others, such as regulatory fines. Say, partnered losses. B. Or media liability. C. Restoration costs after a ransomware attack. D. Are a first-party coverage, not third-party liability. These costs fall under data breach response or cyber extortion coverage. This distinction is critical when assessing what falls under first versus third-party claims in cyber insurance. Question 3. Topic: Risk assessment and underwriting. Which of the following factors would most likely increase the cyber insurance premium for a business in Texas? A. The business has implemented an ISO 27001 certified cybersecurity framework. B. The business stores sensitive customer data such as financial or healthcare information. C. The business has an incident response plan that is regularly updated and tested. D. The business operates in a low-risk industry with minimal exposure to cyber threats. Answer: B. The business stores sensitive customer data, such as financial or healthcare information. Explanation: Storing sensitive data B increases risk exposure, making the business more prone to data breaches and higher claims potential, thereby raising premiums. Implementing ISO 27001A demonstrates strong security practices, which insurers reward with lower premiums. Regularly updated incident response plans C reduce the likelihood and severity of incidents, lowering risk. Operating in a low-risk industry D reduces exposure, leading to lower premiums. Underwriting decisions weigh data sensitivity, industry risks, and security measures to determine premiums. Question 4. Topic: Regulatory framework and compliance. Under Texas data breach laws, which of the following actions must a company take if it determines that sensitive, personal information has been compromised? A. Notify all affected individuals within 90 days of discovering the breach. B. Report the breach to the Texas Department of Insurance regardless of its size. C. Notify affected individuals as quickly as possible, but no later than 60 days after discovery. D. Only notify individuals if the breach results in proven financial harm. Answer: C. Notify affected individuals as quickly as possible, but no later than 60 days after discovery. Explanation: Texas law requires businesses to notify individuals affected by a data breach as quickly as possible, but specifies a maximum time limit of 60 days from discovery. Reporting to the Texas Department of Insurance (B) is not required unless the breach affects an insurer. Proven financial harm (D) is not a prerequisite for notification under Texas law. Non-compliance with these requirements can lead to fines and penalties under the Texas Business and Commerce Code, Chapter 521. Question 5. Topic: Cybersecurity best practices for insurance. Which of the following is the most effective way for a company to reduce its cyber insurance premiums? A. Purchasing multiple layers of coverage across different policies. B. Implementing multi-factor authentication (MFA) and regular employee training. C. Delegating incident response planning to a third-party vendor. D. Relying solely on antivirus software for cybersecurity protection. Answer: B. Implementing multi-factor authentication (MFA) and regular employee training. Explanation: Insurers often provide premium discounts to businesses that adopt proactive security measures such as MFA and ongoing cybersecurity training. These measures significantly reduce risk exposure. Purchasing multiple policies does not impact individual premiums. It only increases overall coverage. Third-party incident response (C) is helpful but does not address internal vulnerabilities. Relying only on antivirus software (D) is insufficient given the complexity of modern threats. Question 6. Scenario-based. Topic: Claims management. Mark's retail company suffers a phishing attack where an employee unknowingly shares login credentials with an attacker. The attacker uses these credentials to steal customer credit card data, leading to fraudulent transactions. Mark files a claim under his cyber insurance policy, which includes third-party coverage for network security, liability, and regulatory fines. However, the insurer denies the claim, citing an exclusion. What is the most likely reason for the denial of Mark's claim? A. The employee's negligence is excluded under network security liability coverage. B. The policy does not cover losses related to phishing attacks. C. The business failed to notify customers within the legally required timeframe. D. Mark's policy excludes coverage for preventable incidents involving employee errors. Answer: D. Mark's policy excludes coverage for preventable incidents involving employee errors. Explanation: Many cyber insurance policies contain exclusions for incidents deemed preventable through proper training or security controls. Network security liability A usually covers third-party claims but may exclude cases tied to employee negligence if explicitly stated. Phishing attacks B are often covered provided the business follows policy conditions. Failure to notify customers C might affect legal penalties but does not necessarily void the claim. Question 7. Topic: Risk assessment and underwriting. Which factor is AST likely to influence the underwriting process for a cyber insurance policy in Texas? A. The company's industry and the sensitivity of its data. B. The company's annual revenue and operational scale. C. The company's geographical location within Texas. D. The presence of third-party risk assessment reports. Answer: C. The company's geographical location within Texas. Explanation: Industry and data sensitivity A, revenue B, and third-party risk reports D are critical underwriting factors because they directly impact risk exposure and claims likelihood. Geographical location C is less relevant unless it affects local compliance obligations or disaster recovery capabilities, which are secondary considerations in cyber insurance underwriting. Question 8. Topic: Policy structures and coverage. Which of the following scenarios would be covered under business interruption coverage in a cyber insurance policy? A. A ransomware attack shuts down a company's servers for 3 days, halting operations. B. A client sues the company for breach of contract after a cyber attack delays a project. C. A company loses access to critical data stored on a vendor's compromised system. D. A company pays a regulatory fine for failing to prevent a data breach. Answer A. A ransomware attack shuts down a company's servers for 3 days, halting operations. Explanation: Business interruption coverage applies to direct operational losses caused by cyber incidents, such as downtime from ransomware attacks. A. Client lawsuits B are addressed under third-party liability. Vendor-related issues C may require contingent business interruption coverage. Regulatory fines D fall under coverage for regulatory penalties, not business interruption. Question 9. Topic: Emerging cyber threats and insurance implications. How does the rise of cryptocurrency affect cyber insurance policies? A. Insurers are increasingly excluding coverage for ransom payments made in cryptocurrency. B. Cryptocurrency usage simplifies claims processing due to traceable transactions. C. Insurers now offer policies tailored exclusively to cryptocurrency risks. D. Cryptocurrency reduces the likelihood of cyber attacks, leading to lower premiums. Answer A. Insurers are increasingly excluding coverage for ransom payments made in cryptocurrency. Explanation: ransom payments made in cryptocurrency are subject to regulatory scrutiny, including OFAC sanctions, making insurers cautious about covering these payments. Cryptocurrency transactions are not easily traceable. B. Due to blockchain anonymity, while some insurers provide specialized coverage. C. These policies are not mainstream. Cryptocurrency has contributed to the rise of ransomware attacks, increasing overall risk. D. Question 10. Topic: Ethics and professional responsibility. Which of the following practices is considered unethical for a cyber insurance agent? A. Educating clients about potential coverage limitations in their policy. B. Selling policies to clients without fully explaining exclusions. C. Recommending additional coverage based on identified cyber risks. D. Advising clients on strategies to mitigate cyber risks. Answer B. Selling policies to clients without fully explaining exclusions. Explanation: ethical agents must ensure clients understand policy limitations A and exclusions. Failure to do so B. Violates professional responsibility and could lead to disputes. Recommending coverage C. And advising on risk mitigation D. Are part of an agent's fiduciary duties to act in the client's best interests. Question 11. Topic: Risk assessment and underwriting. When evaluating a company's risk profile for cyber insurance, which of the following factors is most likely to indicate a higher level of risk? A. The company has a detailed incident response plan and conducts regular tabletop exercises. B. The company uses legacy software and has a low level of employee cybersecurity training. C. The company regularly updates and patches its network and systems. D. The company has outsourced its cybersecurity management to a reputable third-party firm. Answer B. The company uses legacy software and has a low level of employee cybersecurity training. Explanation: legacy software B can introduce vulnerabilities that are not patched or updated, increasing the risk of cyber incidents. Low employee training further compounds this risk. A well-documented incident response plan A and the use of third-party cybersecurity firms D suggests proactive risk management. Regular updates and patches C are important for reducing cybersecurity risk. Question 12. Topic: Policy structures and coverage. Which of the following is typically NOT covered under cyber insurance's first-party coverage? A. Data breach notification costs. B. Lost income due to business interruption. C. Ransom payments made to attackers. D. Legal defense costs for a lawsuit arising from a data breach. Answer D. Legal defense costs for a lawsuit arising from a data breach. Explanation: first-party coverage A, B, C generally covers direct costs to the insured business, including breach notifications, business interruption losses, and ransom payments in case of a cyber attack. Third-party coverage D covers legal defense costs and liabilities resulting from lawsuits filed by customers, regulators, or other external parties. Question 13. Scenario-based. Topic: Claims management. Sophia's company experiences a data breach where an employee's email account is compromised, allowing an attacker to gain access to sensitive customer information. The company immediately starts working with forensic experts to assess the damage and prevent further breaches. The company files a claim under its cyber insurance policy for the cost of forensics, public relations efforts, and customer notification. What should the insurer be most concerned about when evaluating Sophia's claim? A. Whether the company's cybersecurity policies were up to date before the breach. B. Whether the company's financial losses are covered under the business interruption section of the policy. C. Whether the company's incident response efforts were adequate and timely. D. Whether the company informed the insurer about the breach within the legally required time frame. Answer C. Whether the company's incident response efforts were adequate and timely. Explanation: incident response efforts C are crucial because insurers often require insureds to demonstrate prompt and adequate actions to contain the breach, which can impact the claim approval. The adequacy of cybersecurity policies may affect premiums or underwriting, but is not typically a central concern in claims processing. Business interruption coverage B would only apply if the company experienced operational downtime directly tied to the breach. Notification to the insurer D must occur promptly, but this is generally not the primary focus in evaluating the claim itself. Question 14. Topic: Economic and market trends in cyber insurance. Which of the following is the primary factor driving increasing cyber insurance premiums in Texas? A. Increased regulatory requirements on data breach reporting. B. Rising frequency and severity of cyber attacks, especially ransomware. C. A decrease in the number of cyber insurance claims filed by businesses. D. A shift toward comprehensive first-party coverage by insurers. Answer: B. Rising frequency and severity of cyber attacks, especially ransomware. Explanation: the primary driver of rising premiums B is the increasing frequency and severity of cyber attacks, particularly ransomware, which leads to higher claims payouts. Regulatory requirements it may influence policy terms but are not the main driver of premium increases. A decrease in claims C would actually lead to more favorable pricing, not higher premiums. The shift toward first-party coverage D is a market trend but not the primary reason for rising premiums. Question 15. Topic: Emerging cyber threats and insurance implications. How has the rise of supply chain attacks impacted cyber insurance policies? A. Insurers are excluding coverage for any third-party cyber incidents. B. Insurers are increasing premiums for businesses with extensive vendor relationships. C. Insurers are providing discounts for companies that engage in third-party cybersecurity audits. D. Insurers are including coverage for third-party liability related to supply chain disruptions. Answer: B. Insurers are increasing premiums for businesses with extensive vendor relationships. Explanation: supply chain attacks B are a growing concern as attackers target vendors with weaker security controls to compromise larger businesses. This increased risk often leads insurers to raise premiums for companies that depend heavily on third-party vendors. Excluding coverage for third-party incidents A would be extreme and is generally not the case. Discounts for cybersecurity audits C may be offered, but this is not the predominant reaction to supply chain risks. Third-party liability coverage D is common in many policies, but not as a direct response to supply chain attacks. Question 16. Topic: Regulatory framework and compliance. Which of the following statements about the California Consumer Privacy Act (CCPA) and its impact on cyber insurance is accurate? A. The CCPA applies only to businesses with a physical presence in California. B. The CCPA mandates businesses to cover the cost of customer notifications in the event of a breach. C. Cyber insurance policies may need to include exclusions for violations of the CCPA. D. The CCPA requires businesses to offer insurance coverage for data breach incidents. Answer: C. Cyber insurance policies may need to include exclusions for violations of the CCPA. Explanation: CCPA compliance C impacts cyber insurance policies because insurers often exclude coverage for penalties or fines resulting from non-compliance with privacy laws like CCPA. The CCPA applies to any business meeting certain thresholds, regardless of its physical presence. The CCPA does not mandate businesses to cover notification costs B. It simply requires them to notify affected individuals. The CCPA does not require businesses to purchase cyber insurance D. Question 17. Topic: Cybersecurity best practices for insureds. What is the most effective strategy for a company to prevent social engineering attacks, which are a common cybersecurity threat? A. Implementing endpoint security solutions and firewalls. B. Educating employees about recognizing phishing emails and social engineering tactics. C. Regularly updating software and security patches. D. Installing intrusion detection systems IDs to monitor network traffic. Answer: B. Educating employees about recognizing phishing emails and social engineering tactics. Explanation: employee education B is critical for preventing social engineering attacks, as attackers often manipulate individuals to gain access to sensitive information. While endpoint security A, software updates C, and IDS D are important for broader cybersecurity protection, they are less effective against social engineering, which relies on human error. Question 18. Topic: Claims management. Which of the following is typically considered a critical factor in determining the payout for a business interruption claim related to a cyber attack? A. The business's ability to continue operations with limited resources. B. The time it takes for the insurer to assess the claim. C. The company's revenue during the last quarter before the attack. D. The geographical location of the business and its clients. Answer A. The business's ability to continue operations with limited resources. Explanation. Business continuity efforts are critical for assessing the level of business interruption, as the insured business must demonstrate that it made reasonable efforts to mitigate the impact of the attack on its operations. The time to assess the claim, B, and revenue, C, are secondary considerations, while the business's geographical location, D, generally does not directly affect the payout unless specified in the policy. Question 19. Topic: Texas-specific cyber insurance issues. What Texas-specific factors should insurers consider when underwriting policies for businesses in the healthcare sector? A. The business's history of data breach incidents. B. The company's compliance with the Texas cybersecurity framework. C. The business's involvement in the Texas electricity grid. D. The business's role in the Texas agricultural industry. Answer B. The company's compliance with the Texas cybersecurity framework. Explanation. The Texas cybersecurity framework B provides specific guidelines for businesses, especially in sectors like healthcare, which store sensitive personal data. Compliance with this framework can directly influence an insurer's underwriting decision. Data breaches may be considered, but compliance with state frameworks is more directly relevant. The electricity grid, C, and agricultural industry, D, are not particularly relevant to healthcare businesses in Texas. Question 20. Topic: Policy structures and coverage. Which of the following is typically excluded from its standard cyber insurance policies? Third-party coverage. A. Lawsuits filed by customers due to a data breach. B. Claims for intellectual property infringement due to a cyber attack. C. Claims for failure to provide services following a cyber attack. D. Claims for data loss due to a hardware failure. Answer D. Claims for data loss due to a hardware failure. Explanation. Third-party coverage typically applies to claims from external parties due to cyber incidents, such as lawsuits from customers or intellectual property infringement. Claims related to data loss due to a hardware failure are excluded, as they involve internal issues rather than cyber attacks or breaches. Cyber insurance focuses on cyber-related risks, not hardware malfunctions. Question 21. Topic: Cyber risk and business continuity. What is the primary purpose of a business continuity plan (BCP) in relation to cyber insurance? A. To ensure that the business can continue operations during and after a cyber attack. B. To provide legal defense against lawsuits resulting from data breaches. C. To outline employee responsibilities during a cyber incident. D. To guarantee reimbursement for business interruption claims. Answer A. To ensure that the business can continue operations during and after cyber attack. Explanation. The primary purpose of a BCPA is to maintain essential business operations during a disruption such as a cyber attack. Legal defense and employee responsibilities B, C are important but secondary to the core objective of maintaining operations. BCP does not guarantee reimbursement. D, although it may help mitigate damages that are covered by the insurance. Question 22. Topic: Insurance policy terms. Which of the following would most likely trigger a cyber insurance policy's act of war exclusion? A. A large-scale ransomware attack targeting critical infrastructure. B. A state-sponsored cyber attack aimed at a foreign government. C. A data breach that exposes customer credit card information. D. A denial of service DOS attack on a small business website. Answer B. A state-sponsored cyber attack aimed at a foreign government. Explanation. An act of war B typically involves an attack by a foreign government, which is often excluded from cyber insurance coverage. Ransomware and DOS attacks D are common incidents but do not fall under the act of war exclusion. A data breach C is also a common occurrence but is unlikely to be excluded unless it's part of a broader war-related attack. Question 23. Topic: Claims and coverage limits. Which of the following would likely be covered under a cyber liability insurance policy's third-party coverage? A. The cost to notify affected customers of a data breach. B. The legal fees associated with defending against a class action lawsuit due to a data breach. C. The cost of recovering lost or corrupted data due to a cyber attack. D. The cost of purchasing new IT infrastructure after an attack. Answer: B. The legal fees associated with defending against a class action lawsuit due to data breach. Explanation: third-party coverage B generally covers legal fees and settlements when the insured is sued by external parties due to a breach. Data breach notifications and recovery of lost data C are typically first-party coverages. The cost of new IT infrastructure D is usually not covered unless explicitly included under business interruption or other coverage. Question 24. Topic: Privacy laws and compliance. Which of the following privacy regulations is most likely to impact a cyber insurance policy for a business that handles customer data? General Data Protection Regulation (GDPR). B. The Americans with Disabilities Act (IDA). C. Occupational Safety and Health Administration (OSHA) regulations. D. Fair Labor Standards Act (FLSA). Answer A. General Data Protection Regulation (GDPR). Explanation: GDPR is a comprehensive privacy regulation that governs the collection and processing of personal data, which is directly relevant to cyber insurance policies for businesses that manage such data. The ADA, OSHA, and FLSA, B, C, D relate to workplace conditions, labor laws, and disability access, but they do not directly affect cyber insurance or data privacy concern. Question 25. Topic: Data breach management and response. Which of the following is typically the FIRST step in managing a data breach for an organization covered by a cyber insurance policy? A. Notifying the insurance company about the breach. B. Informing affected customers about the breach. C. Containing the breach and stopping further data loss. D. Conducting a forensic investigation into the breach. Answer: C. Containing the breach and stopping further data loss. Explanation: containing the breach C is always the first priority in order to limit further damage and prevent the attacker from gaining additional access, while notifying the insurer and investigating the breach D are crucial. They are done after containment. Customer notifications B typically come after the breach is contained and investigated. Question 26. Scenario-based. Topic: Claims process. The company's data is compromised in a cyber attack and the attackers demand a ransom for restoring access to the encrypted files. The company pays the ransom but later discovers that the files were not restored and additional data is lost. Which of the following actions is most likely to be covered by the company's cyber insurance policy? A. The cost of the ransom paid to the attackers. B. The lost revenue due to the company's inability to operate during the breach. C. The cost of investigating and identifying the attackers. D. The cost of replacing the lost or corrupted data. Answer: B. The lost revenue due to the company's inability to operate during the breach. Explanation: lost revenue B due to business interruption is typically covered under cyber insurance policies, especially when the insured is unable to operate normally because of a cyber attack. The ransom itself A is often covered but may vary depending on the policy. Investigating the attack C and replacing lost data D are also generally covered but fall under different policy sections e.g. forensics or data recovery. Question 27. Topic: Cybersecurity frameworks. Which of the following cybersecurity frameworks is specifically designed for use in the U.S. federal government and is often used as a reference for private sector cybersecurity practices? A. ISO 27001. B. National Institute of Standards and Technology Cybersecurity Framework (NIST-ESF). C. Payment Card Industry Data Security Standard (ECESS). D. Health Insurance Portability and Accountability Act (HIPAA). Answer: B. National Institute of Standards and Technology Cybersecurity Framework (NIST-ESF). Explanation: NIST-CSF-B is a cybersecurity framework widely used by U.S. federal agencies and private sector businesses as a comprehensive approach to cybersecurity risk management. ISO 27001-A is an international standard for information security management. PCI DSS-C focuses on the security of payment card data, while HIPAA-D is specific to healthcare data protection. Question 28. Topic: Insurance policy exclusions. Which of the following is most likely to be excluded from its standard cyber insurance policy? A. Costs associated with restoring lost data. B. Losses due to a cyber attack originating from a hostile foreign government. C. Legal fees for defending against a class action lawsuit due to a data breach. D. Business interruption losses related to a cyber attack. Answer: B. Losses due to a cyber attack originating from a hostile foreign government. Explanation: Cyber insurance policies often exclude war-related activities. B. Including cyber attacks from foreign governments. Data restoration. A. Legal fees. C. And business interruption. D. Are typically covered depending on the policy. Question 29. Topic: Cyber risk and vendor management. How can a business reduce its cyber risk exposure through its vendor management practices? A. By ensuring that vendors have their own cyber insurance coverage. B. By regularly monitoring the vendor's cybersecurity controls and practices. C. By requiring vendors to sign non-disclosure agreements. D. By reducing the number of third-party vendors used in operations. Answer: B. By regularly monitoring the vendor's cybersecurity controls and practices. Explanation: Regular monitoring of vendors' cybersecurity measures helps ensure that their security posture aligns with the business's risk management goals. Having vendors carry insurance is a good practice but does not directly reduce cyber risk exposure. Non-disclosure agreements C and reducing vendor relationships D are useful but less directly related to ongoing risk management. Question 30. Topic: Insurer's risk assessment. When an insurer assesses a company's cyber risk profile, which of the following is most likely to be the LEAST important factor? A. The company's track record of past cyber incidents. B. The company's cybersecurity investment and practices. C. The company's financial stability and revenue history. D. The company's industry sector and its inherent cyber risks. Answer: C. The company's financial stability and revenue history. Explanation: the company's cybersecurity practices. B. Past incidents. A. An industry sector. D. Are more directly relevant to assessing cyber risk than financial stability. C. Which is typically more important for other forms of insurance. Financial stability may still play a role, but it does not impact the insurer's primary risk assessment for cyber-related exposures.